respectively. And I really appreciate the efforts from ACCOSCA and WOCCU in bringing us all to this meeting. Maybe one of the most important things that we need to come up with are the mitigation plans. How do we plan to mitigate the situation going forward, in as far as maintaining the cooperatives after, during, and after the pandemic? So it is very important for us, in particular, to make sure that at the end of the day, we still maintain our current status, where we have members getting access to all of the benefits and products that we produce for them. So it is important to work together so that we all understand each other's situation, and probably find a way of how best can we attend to that particular problem that is in place at that time. So it needs a sound planning, which would seriously minimize the disruptions to the local and national economies, and should help the institutions to maintain the trust and confidence of customers and the membership. I think basically from us, that is what we are looking forward to, sharing that kind of information that will help us to deal with the situation with confidence. Thank you.
Thank you, Cambridge. And again, here is to show that both the regulators and ourselves, our interest is to see that our membership are protected in one form or the other. Now, just a quick housekeeping in regard to how we are going to operate, so that it makes it as clear as possible. I'd like to remind those who are in, as I indicated, we're spread across the continent and off the continent. When you are not speaking, you need to mute those who are presenting. As soon as you're done, you mute your mic. And throughout this particular session, we're also going to have 4 or 5 polls, questions that it will be clear to be shown on the screen. We'd like your response to understand how you are perhaps responding to some of those issues, and whether you understand the issue that we face in terms of regulatory that will affect our membership. Again, the other thing that we will also request from you at the end of this is we are collecting all the responses that are happening across the continent, from Cameroon to South Africa, Kenya to the Gambia to Tanzania, and we'll have these used both in a ACCOSCA website and World Council website, so that people know of various responses across the continent, and perhaps areas that as regulators we can either improve or things that we can use to support our membership. At the other last part that I'd like to mention, that the webinar is being recorded, so we'll use this as a way of cascading as much information as possible on whatever we've been discussed. With this, I'd like us to go straight into our discussion. Our first presentation, we are going to have a presentation from Andrew Price. He's the Vice President of Advocacy at World Council. He's engaged with ACCOSCA before. He engaged with regulators during last year's Regulator Roundtable Africa in Nigeria, where we are around 19 regulators. So his presentation is basically going to touch on what people are doing across, or regulators are doing across the globe to handle crises similar to this. So I'd like to welcome Andrew Price to give his presentation. Andy?
Thank you, and good morning or good afternoon, depending on where you're at. It's a pleasure to be here, and I'm sorry that it's under these challenging circumstances. So what I hope to do today is I don't have a lot of answers on I don't have that key magic to get us through this situation. But what I can do coming from World Council is kind of share what we're seeing from around the world, what other regulators are doing, what other credit unions are doing, and also want to talk to you through what we're seeing from the international standard setting bodies and some of their responses. Some of those are just coming out. One just came out on Monday from the Basel Committee, and I will talk through that. Okay, if we can go on to the next slide as well if you want. Brian Branch, the CEO of WOCCU, has done his presentation, and it's up on our website. And he does a nice job of giving us a good framework from a high-level perspective as how to look at the situation. And he divides it up in kind of 3 waves. The first wave is a health crisis that we're going through right now, dealing with that and all the lockdowns. The second wave that he sees is what he calls institutional stress, and I'll talk a little bit about that. And then the third wave, probably longer-term lookout, is what he calls the global recession, and how we might talk through that. And I think it's a good way to kind of approach it, because it explains a lot of what is coming out of the international standard setting bodies, and how their approach to some of the regulatory changes that they're implementing during the crisis. So the first wave is a health crisis, and you're looking at the impact on the members, the impact on the community, unemployment, stresses on the health system, schools being shut down, small businesses are failing. The impact on members, they're sick, they're unable to work, they can't go to work because of the lockdowns, they're financially fragile, set back by health costs, obviously people dying, not able to generate income, unable to make their loan payments. Those are the type of things that we're seeing. That will translate to the second wave, the credit union institutional stress. We're going to see really the impact starting to flow through to a credit union. The increase in your provision costs and your write-offs, decreased portfolio quality, decreased liquidity, liquidity and savings that are coming in, slower growth, and a reduced capital position. I think all of those are kind of things to think through as we move forward during the crisis. And then the third wave is the global recession that is likely to come. Business has stopped. We expect the entire economy around the world to varying degrees, depending on where you are in the world. But that obviously is going to create a lot of impact, not only on the members, on the communities, on the credit unions, and the credit union lower return on bank deposits, probably limited lending opportunities, danger of continued losses, insolvency. We'll likely see sector consolidation as well. I suspect a lot of credit unions will become insolvent. You'll have to either liquidate them or merge them or do whatever is appropriate in that situation. So putting it into that context, what I want to kind of do is walk you through what I'm seeing from a WOCCU perspective. Some of the policymaker issues is the first place I'll go to talk through some of the responses from the international standard setting bodies and what has come out through there. And I apologize, one of them came out on Monday. I didn't get these slides updated, but I do have the responses up on WOCCU's website if you want to get to the details on there as well. And then I'll talk through, I call it operational issues, but really I want to talk through those items that I've seen from around the world that either regulators are putting restrictions on credit union, or they're doing things to provide relief. They kind of go into those 2 general buckets as well. I'll touch on a couple other issues in there, and I call this advocacy strategies. I don't want to be characterized as a lobbying, but just kind of talk through some of those issues about, when a credit union is having a dialogue with the regulator, kind of some of the approaches to take on that as well. Okay, so yes. Okay, so let me walk you through some of the international standard setting body responses. The Financial Stability Board, and by the way, all these international standard setting bodies, most of the central banks from around the world participate in some form or fashion with these bodies. So a lot of these positions are not law per se, but they're very influential to national level regulators. A lot of times look to these standards to get guidance as to what they're going to do, best practices. You're not necessarily bound by all of the directions, but it's a really nice place to look to provide consistency around the world as far as regulations. The Financial Stability Board was kind of early on with one of the responses, and right now they're encouraging authorities and financial institutions to make use of the flexibility that's inherent within the standards, to continue to serve the members of the credit union, ensuring that capital and liquidity resources in the financial systems are available when they're needed. So supporting financial institutions at the national level with whatever resources you have at your national level. This is good. This is a direction from the Financial Stability Board saying, hey, we get that there's a crisis out there. This is important. We want regulators to be flexible. We're going to have to make adjustments to help us get through this crisis. So that's kind of the first one, and we can go to the next slide. So the Basel Committee, this is the first statement they put out is what I have on your screen here. And their guidance early on was, to support using the flexibility that's inherent in the Basel framework, which are your capital standards for the most part, to respond to it. So likewise, from the Financial Stability Board, they have given direction to use flexibility. And then on Monday, they came out with a much more specific statement to provide some particular measures. And I'll walk you through those. And I apologize, I don't have this on the screen. But some very important stuff came out, particularly with respect to their reproach on expected credit losses. In the United States, we call it CECL, the rest of the world, IFRS 9. How you're going to account for your allowance, and they've allowed for some flexibility, particularly in areas where we're seeing payment moratoriums being granted, or credit unions that want to give a payment holiday to get your members, through the crisis. Hopefully, once the lockdowns go away, they can start generating income, start making their payments. But what they have signaled in their release was to provide some flexibility in the accounting standards. When I get to some of the operational issues later on, I'll walk you through some of the specifics of what I've seen from other countries, everything from extending the definition of default. A lot of regulators put 90 days to, if you have a troubled payment or missed payments. Usually you put those into default at 90 days is the common number that I've seen out there. There's jurisdictions that vary on that. But we've seen extensions by national level regulators to take that out to 150 days. I've even heard of one giving it through the end of the year. I mean, that way you don't have to provision for a trouble loan and reduce the amount of capital that you have for a loan that the cause of the missed payment is the immediate crisis that's going on. So it gives a little bit of flexibility to the credit union to have a little more capital they can use to get it into the system. They've given some delays to the implementation of the Basel standards. Now for credit unions, we don't typically adopt Basel III. We usually engage in proportionality on that and tailor it for our credit unions. But still, a lot of the reforms that came out of the financial crisis, a lot of jurisdictions are in the process of adjusting their capital standards to account for that. And so the word from the Basel Committee is kind of, hey, let's hold off on that for a little while we get through the crisis, then we can go back to that. So once again, giving relief from capital standards. The Basel Committee is also, when the Basel III reforms came down, there's increased cushions in there to allow for additional capital to deal with the crisis, and they're saying, hey, go ahead and tap into that cushion. We're not going to require you to maintain that cushion. That cushion is there for this purpose. Go ahead and tap into it and use it to keep your credit unions floating and operating and serving the economy. The treatment of non-performing loans too also was dealt in there, and then a couple more items. Non-centrally cleared derivatives, probably not an issue for credit unions so much. So what you're seeing out of the Basel Committee is, again, a clear indication that say, hey, use the tools in your toolbox, provide some flexibility. Let's do what we can to deal with, the phase one, the health crisis. Let's get us through this. Even though your capital positions and your balance sheets aren't going to look pretty right now, we get that. Let's just get us through the crisis, then we can worry about bringing everyone back to normal. And I'm not saying that we need to let credit unions fail. Obviously, that can happen. That's going to happen. But for those credit unions that are strong and we think we can make them through, let's give them the flexibility to keep serving their members. And then we go to the next screen. It kind of as a corollary to what the Basel Committee did. Oh, I left the screen out as well, but it goes along with what the Basel Committee did, coming out of the IASB, the International Accounting Standard Setting Boards, which sets IFRS 9. Likewise, they have similar direction with dealing with troubled loans, payment moratoriums, payment guarantees that are coming down in some jurisdiction to allow some flexibility to deal with the accounting standards out that. So what the IFRS 9 did kind of goes hand in hand with what the Basel Committee did as well on that. So your three big international standard setting bodies are all saying, hey, we have a health crisis. We would like to give national level regulators some flexibility to do what's appropriate in their particular country, and they've set out some specific measures in there to do that. So that's for international standard setting body responses. And by the way, we've seen these are international standard setting bodies, but the EU likewise as well. They have a ton of measures that they've come out with for all the countries in Europe. The United States, Canada, Australia, your larger credit union systems around the world. Likewise, all the national level regulators have guidance that pretty much follow what the international standard setting bodies, and a lot of the national level regulators are even going further. And we'll talk through some of the things that they've done here in just a second. So what we're seeing come down, I'm turning now to the operational level, what I kind of see going on at the national level. And these are all over. And by the way, if you're a regulator, you know what's right for your country. Not all of these might be appropriate for your country, but I just want to put them out there to give you examples of what's going on around the world. Some of the things we've seen coming down from regulators are moratorium on payments. I've seen some go through September. I've seen some go through the end of the year, which is astonishing. Nonetheless, you have some regulators that are doing that. The problem with that is how do you deal with the accounting of that on the backside? And a lot of regulators are not putting out clear guidance on this as far as how an institution is supposed to treat that. Can they accrue interest during the moratorium? Are they going to capitalize the payments on the end? Do they have to forgive them outright? I've seen a lack of clarity coming out from regulators on when moratoriums are granted. We understand why they're doing them, and it's probably appropriate for national level. I'm not criticizing them on that. The only criticism is there will need to be an operational guidance coming from the regulator as how is a credit union to deal with that issue. Moratoriums on foreclosures, moratorium on debt collection, moratoriums on evictions. And obviously these are responding to the health crisis, understanding that people are locked down, they can't get out, they can't move, they don't have income coming in. And so the idea is to, let's get them through the crisis and then we can get them back to work and hopefully get things back to normal, although we all know that's likely to take a while to do that. Physical lockdowns, I think everywhere in the world has these now. I'm at home myself, working from home as well. The designation of credit unions as an essential service provider to allow them to keep operating has been an issue that we've seen come up from around the world. A lot of times, credit unions are not included in the definition of essential, even though their bank counterparts are. So having regulators designate credit unions as an essential provider so that they can keep up and running and continue to provide service to their members is an issue that needs to be dealt with. Orders affecting service in branches, whether they can stay open, whether they're allowed to let members come into their lobbies. We've seen varying orders coming out on if they can do that. In the Ukraine, for example, we saw them shut down entirely, not being able to serve their members at all for a period of time. They have since come off of that, thank goodness. There's issue, can you even accept a payment? The problem in Ukraine is they really didn't have any online services as well. So the thought process there by the regulator was, well, they can't do anything online anyways. I can't let them in the branch to spread coronavirus. I might as well shut them down. Not realizing that shutting down a credit union entirely is probably not the best thing. So they've come off of that too, but although we've seen that order come down as well. A lot of stimulus packages that national level governments are coming out there to support small businesses, to provide employee protection. In some areas, we're seeing them protect their wages. They're paying out money, just paying the employees in lieu of the business paying the employee as well. Unemployment compensation. We've seen some prohibitions on letting anyone, on firing anybody or letting anyone go. Those are some measures that some national level jurisdictions have done. All of this, flows through to the credit union because they're subject to a lot of that. And then liquidity, we've seen runs in a lot of countries as well. And I'm going to talk specifically about that in just a second here. I've put out some thoughts on that topic as well because it is a big issue. I've heard about runs in the Caribbean. I've heard about runs in Europe, where people are panicking because of the situation. They want to go get cash out. So this is a big issue, and I think requires a good response from the credit unions working with the regulators to deal with that issue. Okay, so next slide, please. So the accounting issues, I've kind of dealt with that coming from the Basel Committee is now giving us some more guidance as to, allowing some flexibility with respect to that. So I won't rehash that, but just want to point out on this slide, if you're looking for some guidance that have come out from other regulators, the ones that I've seen so far are the European Banking Authority, the EBA, the European Central Bank, the Prudential Regulatory Authority out of UK and Malaysia have all issued guidance on that. And the United States, there's they adopted a delay in CECL in the expected credit loss or IFRS 9. It's the same. CECL and IFRS 9 are really the same thing. America just has to be different and call it something else. But that's your expected loss accounting, the forward-looking, your calculation of your expected loss. They're delaying the implementation of that for a while because that's a big hit to your capital as well. Dealing with all of these things, the payment moratoriums is a big issue in how to do that. I think the general consensus is to give some flexibility to credit unions, at least to get them through the crisis as well. Okay, so next slide. So a couple of, I probably didn't touch on all of these when I talked, but we're seeing from the accounting standpoint, change in risk weights for certain loans, particularly if you're getting loans, from your government to the credit union for liquidity purposes, how you treat that on your balance sheet is getting some adjustment in some areas. Troubled debt restructurings, how you deal with those that are granted during the crisis. And I already talked about some jurisdictions extending timelines. North Macedonia went from 90 to 150 days for their definition of default. So when you have to consider a loan in default for purposes of putting that on your books as well. Okay, so next slide. Designation is essential. I touched on this a little bit. you know, this is important for credit unions to be able to have this so that they can at least continue operating and serving their members as well, so they can get exempt from some of the prohibitions about going out as well. And that doesn't mean that a credit union isn't supposed to take measures to protect their employees. We still have to do all the social distancing and you know, put the screens on the teller walls and make people, you know, stand far up. All of those measures that we're all familiar with still need to, you know, but for the credit union to be able to operate, so they can operate their ATMs, they can make loans, they can take deposits, although, you know, probably not taking a lot of deposits right now, but nonetheless, but to be able to continue to keep your operations kind of up and running. This is an important issue that we've seen some trouble with for credit unions around the world. Okay, next screen. Liquidity and runs on credit union, definitely a big issue that we've seen. So we're recommending, you know, that the credit union do their analysis of their cash, their liquidity situation, and what we like to see is regulators allowing, you know, the credit union to put appropriate limits on their withdrawals if that's what they need to do. I have seen some jurisdictions, for example, in Romania, they put in limits to, I think it's 1,000 euros per week that a member is allowed to take out. They did that at the national level regulator, you know, to help with the liquidity situation. You know, the credit union's got to consider that, you know, in a crisis, payments may not occur. I mean, I think it's pretty obvious, but obviously that affects your cash on hand as well. I'm recommending that credit unions get in touch with the regulators to see what can be done to help. Are there going to be loans that are coming in either from a central or a corporate credit union, or however your country tends to set that up, to, you know, start having those conversations. A lot of jurisdictions are making emergency loans available. Even though it may not be set up in your regulatory framework, they're still finding other ways to be able to get liquidity down to the credit union level. And then, of course, there's a practical issue that goes along with that. How do you get the cash to the credit union? How do you get it to your ATM? You've got all these restrictions on how you can work and the social distancing, and can you get there? I mean, those are problematic issues that are, you know, may seem odd, but they're real issues that have to be deal with that. The other thing is we're urging credit unions and regulators to get on the same page as far as messaging. You know, you want to give, you don't want to have runs. I mean, we all know that's bad, and we've seen that. United States had them in the 30s. We had some after the Great Recession as well here. I've heard about runs in Estonia, Poland and Ireland also indicated early on in the crisis they were experiencing some of that. The Caribbean throughout, it's a larger issue there. We have seen that. So what I have on the screen here are just kind of, you know, things to thought through. But I want to get back to my point that I think it's important here for credit unions and regulators to get on messaging about that. If you have deposit insurance or a guarantee for your funds, I think it's important to let the public know about that so that there's some confidence that, hey, your funds are going to be safe and secure in a credit union. You want to get on the messaging to say, hey, people, don't panic. You know, yeah, we may have some short-term issues about supply because we can't get money, you know, into the credit union, the ATM, but don't panic. It will be there eventually to stop people from going in and taking all their cash as well. So I recommend credit unions and regulators work close together to get consistent messaging, whatever is appropriate at your national level as well. So those are kind of some operationals concerning liquidity, and then you know, getting access for the credit union from the central or from the source, you know, at least on a temporary basis to help get them through the crisis as well. Okay, so next slide. Let me see. Yeah, I've really touched on a lot of these other issues. Yeah, fee waivers. I've seen some jurisdictions come out with that. Prohibition on charging late fees and other fees. To hold a member harmless getting through the crisis as well. I've talked through a lot of these already. Other services that a credit union might want to consider offering this time: financial counseling, identity and data protection guidance, scam guidance. These are good things for credit unions to put out during this time. Health information, a lot of credit unions have on their website information about that. These are kind of obvious things, but just want to put them on there. Okay, next slide. Yeah, physical disruptions. There's going to be a strong push now to provide online services as well. Obviously, that cuts down on having to have contact with someone who might be infected as well. Shared branching, drive up teller service, if you have that, putting in teller glass windows, providing gloves, sanitizers, cleaning your counters. Some places are closing the lobby, only allowing walk-up service where there's a barrier in between you. These are all we're seeing various responses around the world. Again, it's kind of what's appropriate for your system and your particular situation. We urge kind of regulators to kind of work with credit unions. A lot of some places have laws concerning about when you have to be open, and some places have you can't have your credit union closed for more than 2 days in a row. Some of those restrictions you may want to consider either getting waived or adjusted for obvious reasons. I mean, we have to adjust our timing on that. So if you have those kind of laws on your books, those are things that you want to look at to see if they're appropriate to waive or to deal with as well. Okay, next screen. Reporting issue, getting reports in. We're seeing a lot of jurisdictions that are waiving deadlines for reporting, reports that have to get in, audits that have to get in. Audits are very tricky. I mean, because a lot of times your auditor wants to come in and sample loan files, look at physical records, see if there's signatures on things. I mean, all these things that have to occur during an audit are a little more tricky now during COVID. So we're seeing some jurisdiction waive some reporting deadlines. I've seen a lot of jurisdiction waive report for their citizens for filing tax returns, or if I've seen a lot of regulators, delay physical exams. Some are now only doing remote exams. So any deadline, and I'm also seeing anti-money laundering deadlines being waived as well. Although regulators, hate to touch that one, they're very clear that you still have AML requirements even during the crisis. But perhaps some of the hard deadlines for filing, a currency transaction report or suspicious activity report, maybe given a little more leeway on those. I have seen some jurisdiction waive those deadlines, although of course you cannot allow money laundering to occur. They're not sending that message, just perhaps being a little more easier on some of the filing deadlines as well. Okay, next slide. And then I put this advocacy issues on there. A lot of regulators are rightfully so. I mean, this is not a criticism, but sometimes they're very hesitant to allow flexibility during this time. But I think the message that you're seeing coming out from the international standard setting bodies and a lot of jurisdictions around the world is that, hey, this is a health crisis that we're dealing with. We have to make adjustments. And so to the extent that we can give some flexibility and work around and make those operational issues for a credit union, it's important to do that. Not because it makes sense from a prudential standpoint, but because it's a health crisis. That's, we've got to get through this period. So we're going to allow it to do that. Credit unions are important. The services that provide to their members, the loans, the financial, I mean, they're part of the economy and part of, they can be the solution here and help people come through this crisis. So it's important to keep them functioning and working. So we want to do that as well. And then the next slide, I'm getting close to the end here, guys. So you can, this page is some of the items that we put out on the WOCCU website that we're suggesting kind of as relief that can be provided. You know, the flexibility on the restriction of loans, allowing credit unions to make loans with special terms and reduce documentation, so they can make a a small loan fairly quickly in order to assist members, help them get through this troubled time. Easing some restrictions on allowing them to deal with a correspondent bank, or where they can get liquidity from if they're getting it from a governmental entity, a central bank or whatnot. Sometimes that's prohibited by law. You may want to consider if you can do that in a safe manner to ease some of those restrictions, so that they can have a wider pool of people that they can get liquidity from as well. The correspondent banking de-risking issue is a big issue. Was before the crisis, continues to be a big issue now. Perhaps this is an opportunity to break down some of those barriers so that credit unions can have access to better firms. I've seen some jurisdictions allowing credit unions to serve non-members as well for check cashing services, and perhaps access to payment services as well. I think that's a nice one, which will, I mean, that helps your citizens of the country, even though, I mean, credit union typically got to be a member to get services. There's some prohibitions on that. Perhaps relaxing that, at least for the period of time, is probably a good idea. Allowing credit unions to conduct their management meetings virtually. Sometimes that's prohibited, but it's probably a prudent thing to allow that during this period of time. And then liquidity support, employee support, urging that from the government. Well, we got to keep the employees of the credit union working as well. So whatever support your jurisdiction can do there is helpful to a credit union as well. I think I'm getting towards the end here. What's my next slide? Yeah, so on our website we have a chart that I'm putting together with all the responses from around the world. I would love to hear from you on that. If you have that, I have Europe, Canada, Australia up there now. Kenya has provided me a whole host of stuff. I have a whole bunch of stuff from Latin America I'm about to put up there, and the Caribbean is starting to trickle in. I would love to get more from around Africa as well to include on there. I mean, that way we can all be sharing information about what each jurisdiction has done as well. And I think I'm at the end, so I'm going to turn it back to George.
Thank you, Andy. I know it's always challenging to bring a presentation of 1 hour into 20 minutes. You've done extremely well to highlight what regulators perhaps should do at the policy level, at the operational level, and at the advocacy level. So what then we're going to do, I've seen a couple of people asking questions through the chat. At the end of the webinar, we'll give you a few minutes as you do your point of reflection to respond to some of those questions. I'm already seeing 2 questions from the 2 countries, so we'll just share that. So then, okay. What you're going to do next, we'll request you to respond to the question in front of you. Has your regulatory agency taken any step to provide regulatory relief to SACCOs to deal with this crisis? So the answer is simply yes or no. And we'll request all of you to respond to that, with the exemption of the presenters and the organizers. While responding to that, I'd also like to guide the next presenters. We are going to stick to at most 5 minutes each, and kindly you time yourself. The next session, what we've done is we are going to look at what the regulators are actually responding to. You heard from Andy, there is the policy level, there is operational level, and at the advocacy level. Now, we've selected 2 specific countries that were at the forefront to establish regulatory framework. One, Kenya. So Kenya will have the regulator, John Mwaka, speak in that short time but we'll also have Giorgio Toto from Cusco to respond so that we know this is a collaboration. The way Andy has said, it's key to work together. For South Africa, we'll only have the regulator speak because at the moment the National Association is a little bit dysfunctional. So we'll just deal with it in that manner. So with that, I'll ask John Mwaka to come forward and do his presentation. You do at most 5 minutes. Kindly time yourself. You'll also see me signal you when your time is up.
Hi, George. I'm so sorry, but it looks like John actually was unable to.
I saw him on video at some point.
Yeah, he joined. He had to log off, it looks like.
What about Peter Junguna, if Peter is in?
Yep, let me just make him a panelist.
Hello.
So Peter can speak on behalf of the team from SASRA. Peter, you have a maximum of 5 minutes. Your response as regulatory authority in this particular time. We can hear you.
Thank you. I think thank you very much. What I can confirm is that immediately the government issued directives on measures to contain the spread. We followed to guide the SACCOs, allowing them to offer services offsite, online as much as possible. Again, we recognize that submission of audit is due by 31st March. We guided them to do it online so that luckily most of them have completed the audit by that time. So we allowed them to submit not the physical copies, but simply submit online. Another move we took is that annual AGMs are very critical for Kenya SACCOs. So we allowed the SACCOs to continue paying their rebates and further to that even dividends without holding AGM, so long as the accounts were approved by ourselves. And then the rest now, ratification will follow in the AGMs. I'll also report on behalf of the commissioner that the AGMs, which are mandatorily supposed to be held after approval of accounts by end of April, were also suspended, and they were allowed to operate. And any elections that were to be done were, were generally the holders of office were to continue until the situation normalizes. Also, the issue of lending, we have guided them to, use flexibility provided in the regulations in terms of rescheduling, restructuring, and importantly, requiring them now to develop very clear policy guidelines in terms of how to reschedule, restructure loans so there is consistency. We've already seen positive response in terms of slowdown in lending, holding, unless where necessary. Business, project loans, most of them are indicating they have slowed down on that, so that they hold the liquidity for critical services. The point you noted is where SACCOs are not recognized as banks. That has been a challenge because banks were given a waiver so as to encourage people to use cashless, that is mobile money. SACCOs have not gotten a waiver yet for like $10. Anything below $10 is free, no charge. We have written to the Telcom and Central Bank, and we hope by close of this we can get some breakthrough on that, so that SACCOs on mobile platforms can also get waivers on those, and withdrawals or transactions below $10. Of course, we, the other thing is we have allowed them to use not to hold AGMs. Board meetings. They can do so virtually. So long as they have the technology. Otherwise, they can, a few people can meet if a decision must be made, for example, approval of accounts. A committee, for example, audit committee can meet separately. So audit committee, because in Kenya it's illegal to meet 10 people above, so they can have flexibility to meet like 4 people if necessary, if they cannot do online meetings. And that way, they are able to make sure that things that require approval of the board, especially like audited accounts, are not held back unnecessarily. So for now, I would say those are some of the guidance we have given. We are for recognition of SACCOs, giving them status. That is what designation as essential services. They are by virtue of being financial institutions, but there seems to be confusion around that. Government issued a circular where that licensed financial institutions are. We have gotten reports, very few incidences where the security apparatus are saying not recognizing them as such. We are liaising with the relevant government department to make sure that the security officers are guided appropriately, and we also expect by close of this week that matter will be very clear, especially now where we have now enhanced measures. We want to make sure that matter is closed, that no security officer treats SACCOs just like any other business and therefore demanding their closure. So for now, that's what I would say is where we are. I think there has been very good response, and we haven't had cases where SACCOs are having to close down. So far, the measures have ensured they continue to avail services, while ourselves, regulatory approvals that are key, we are able to provide them through electronically by just getting the corresponding. All our staff are actually working offsite. Luckily for us, our usually regular offsite inspection starts in May, and we have to defer that. We are already reviewing that. But lastly, and most important, is that we have asked SACCOs from this month to give us the daily returns on liquidity, which we are not getting before, so that we monitor the impact of COVID on a day-to-day basis, so that will allow us to come with more practical interventions. Related to that, on the loan performance, we usually get reports on quarterly basis. We have asked the SACCOs again to give us every month, starting 15th of this month. And so far, we have seen very good response. And our prayer is that we don't reach to lockdown, because that data and loan activity performance monitoring will be very useful in the kind of interventions that will be required to restart and address the challenges that SACCOs, impact rather, that SACCOs will have experienced. So I'll stop there for now. George, thank you very much.
Thank you, Peter, on behalf of, speaking on behalf of SASRA. And I know all these, there must have been a contribution from the National Association. And the idea here is also to get how the National Association played a role in having some of those changes, so that other countries can also learn on the role of National Association in engaging with the regulator. So we have Giorgio Toto. Giorgio Toto can speak on how you've managed to engage during this particular area. And again, you just stick on the three issues that Andy has mentioned, at the policy level, at the operational level, and at the advocacy level, one or two of those things that you picked. George?
Thank you, George, and also Peter for highlighting what he has highlighted. Indeed, quite a number, the regulators, as I mentioned, is something that they have consented to with the SACCOs, and the circulars were issued to that effect. At the policy level, what we've been doing is to interact very closely with the commissioner to do a countrywide kind of circular to all cooperatives, the ones which are deposit taking and also what they are calling non-deposit taking, so that it takes into account every SACCO or credit union that is doing the business of SACCOs in Kenya. And indeed, at that policy level, the commissioner issued a circular allowing all the SACCOs in this country, or all the credit unions and other forms of cooperatives in this country, to pay out dividends and also interest on income and any form of rebates to their members, pending the ratification by the AGM, which actually is supposed to end by the end of April. And that was just by invoking Section 93 of the Cooperative Societies Act that allows him to do that. But we have a few issues that we will still deal with the office of the regulator. That is like on issues of loan provisioning as per the IFRS 9, given that a lot of things are happening all at the same time. We are having challenges with the people who are losing their jobs, or the ones who are taking a salary cut, and that therefore means that they must ask for a moratorium on the loans that they are taken, And in this case, a lot of loans are going to be unpaid for a number of maybe months. We still don't know. And we have seen some of the SACCOs that have what we call the open common bonds and who are lending to businesses. Some of the businesses have already closed. We have also seen some sectors like the airlines, the travel industry, the hotel industry. The people have already lost their jobs, and therefore that means that the liquidity position of some of those SACCOs is going to be a problem. And as you know, cash is king. So without the cash, they'll not be able to report the liquidity as expected, and that means therefore that the operations will also be curtailed. So the issue of loan rescheduling, the loan provisioning, and also the issue of capital adequacy ratios, we will also engage with the regulator to allow even shelving a bit by even 50% alone. And also the issue of classifying credit union SACCOs as critical services is something that we have been pushing for the past 11 or so years. And for the first time, we received a bill from Parliament about 1 month ago, which now recognizes them as financial institutions under Schedule 3 as item number 4, which now is all right. Now, in terms of the COVID-19, we are also trying to respond in terms of liaising with the government department for cooperatives, where a task force has been formed, and the regulator is among them, where we are trying to raise funds for the sectors which are vulnerable and to give them the essential items like the face masks. And so far, we have the sector has raised quite a big chunk of money to enable us present to the mainstream government. We have also seen a problem of the SACCOs that have the open common bond and the businesses that have collapsed. So that means that the write-offs at the tail end of it all may be too much. That basically would mean that we are going to witness a situation of increased cost on loan collection for members who will have lost their businesses or have lost their jobs, who are requesting for a moratorium. So increased loan provisioning in the balance sheets will have to be there. But above all, this is the time that all our apex organizations or our leagues need to understand that they need to have very close communication with the regulator, and they should work just as a team as we try to work with the SASRA here in Kenya. Otherwise, without open communication and continuously advising and sensitizing the members and also the regulator of what is happening on the ground, may really be catastrophic on the credit unions across, not only in a country like Kenya, but across the globe. Because what we are facing is what we refer to as a black swan. We do not know the proper impact until when we do the computation retrospectively at the end of it all. But again, the impact is severe. So it is something that we need to monitor, and we formulate strategies together with the policymakers, with the regulator, and also the players on the ground. That's what I have as at the moment, George.
Yeah, thank you, George. What I like, and the reason why we brought the two of you together, because we realized that there's for the past 10 days, there have been lots of interaction between the regulator, your team, and the mainstream government, to the extent of even forming a task force that will support the membership and making SACCOs relevant, despite the fact that we are concerned about loan restructuring, about liquidity issues. So with that, I'll thank Peter for giving us that brief, and George, we'll probably have more of this conversation. So I'll ask South Africa, David De Jong. Unfortunately for South Africa, it will be only from one perspective, because we are coming at the point whereby they're already facing enormous challenges even before COVID-19. So that is almost like double the challenge that the team is facing. So let's get to hear what David De Jong from South Africa will say about their response.
Thanks, George. Are you switching on my video?
Yeah, you can switch on your video, please.
There we go. Thanks. So, George, I'm at the Cooperative Banks Development Agency at the moment. So I'm a little bit removed from the Prudential Authority. But we are in close touch with the Prudential Authority. And in fact, Macintosh Kuklangisa is on this web call as well. And I'm going to ask if it's possible that he can perhaps also give a bit of a response from the Prudential Authority as to what they currently are doing. So I'm just going to give a quick overview. Of course, we've got a much smaller movement than everybody else. Our CFIs and our cooperative financial institutions are much, much smaller. So when at the onset of the COVID-19, from the Cooperative Banks Development Agency side, because our cooperatives are still very, very developmental, the first thing that we did, in fact, was to put out a briefing note to the cooperatives or to the CFIs, in fact, providing them with some guidelines as to how to deal with this. And there we covered, for example, some of the risk management considerations that they need to go through, how they're going to deal with the officers, some of the things that we spoke about earlier, how they're going to deal with quarantined areas, where they're even going to stay open, how are they going to deal with their members going forward, the safety of the members, the opening and closing times, you know, how are they going to continue operating, what would happen if key persons had to be removed, credit risk was one of the big issues that we asked the CFI to start looking at, if it was going to have an impact. We also asked them to kind of look at their liquidity, their market risk, and of course regulatory risk as well in terms of their ability to provide returns and so on and so on. So what essentially happened though was that when our lockdown happened in South Africa, I'd say that probably 70% of the CFIs, because they're not transactional, opted rather to close their CFIs, which in fact was part of what the government strategy was. They weren't recognized, or they could have been recognized as a critical service if they wanted to, but and they could apply to be open. However, as most of them weren't transactional, they opted to close, and if members needed their money, then they could approach the manager, and the manager would be able to do transfers for them. There were 2 or 3 CFIs that worked with our pensioners, and our pension payouts happened at the end of each month. Those particular CFIs couldn't close immediately. So what they did was they went through a process of having to look how they're going to do the pension payouts, which was again at the end of the month. And they had a process whereby over 2 or 3 days they would do those payouts to make sure that they had the cash and that type of thing. From the regulatory side, the key areas, of course, that our Prudential Authority has been talking around is around giving some relief around liquidity, giving relief around capital, and then also looking at the provisioning issues. So at the same time, we've been looking at how the CFIs in fact could benefit from the same type of relief if they required it. But truth be told though, most of the CFIs who we're contacting at the moment, because they aren't open, they aren't really seeing the real impact that's going to be happening on them. So the approach that the Prudential Authority has taken at the moment is, to my knowledge, twofold. The one is that they have been doing a survey amongst the CFIs to make sure that they have the type of liquidity they're going to require to be able to deal with payouts or paying withdrawals when they come due. But the other thing which they've really been emphasizing with every single CFI, just continually, is stay in touch with us, let us know what's going on, and if you need regulatory relief, then we are there to discuss it with you and to provide it to you. I mean, they always like saying we're there to service you. If you need that help, please let us know. So that's essentially where we are with our response to this towards our CFIs, our small CFIs, and our cooperative banks. I wonder if you can give access to Max so that he can maybe just pop in.
Macintosh, your audio should be enabled. So if you don't mind, yep.
Okay, thanks, George. I'm just trying to I'm trying to figure out where the camera is, but I don't think that's important at this stage. Now, I think Dave summarized the key issues very well from a regulatory perspective. I think what's key to emphasize is a number of the cooperative financial institutions have indicated that they will either be working from home remotely, or that they will not be actually reporting for work during this period, but they haven't been classified as an essential service. There are some that are digitally based that are obviously going to be working from home, or currently working from home. The other thing that we've done for the large CFIs, i.e. the cooperative banks, the funds that we've got, what we are currently doing is we are monitoring their liquidity position on a weekly basis. So we've got a schedule that we send through, and then we monitor that on a regular basis, on a weekly basis. At the moment, there's nothing that we are seeing that is reflective of a stressful situation on the cooperative banks, but we are closely monitoring that. I know from the banking sector broadly, there have been interventions in terms of issues around the capital and so forth. That discussion has not spread to the credit unions or the CFIs as yet. And I think once again, I think the position of the Prudential Authority is, look, we are open to discussions to hear what the sector is looking at. And I think we are closely collaborating with the Cooperative Banks Development Agency to make sure that that happens. And I think the other thing that is also important to note is wherever possible, most of the site examination that had been scheduled for the next coming weeks, I think at least until end of April, probably the early weeks of May, those we are currently in the process of rescheduling those where they can be held virtually. So I think that's where we are at the moment. Thank you.
So thank you, David and Mark, giving us South African perspective. So I'd like to go to the other question regarding the poll. We requested the first one for you to say yes or no if there's some regulatory relief. The second poll was asking about if we've listed some reliefs, if you could select any of them to show whether you are doing some of those. And I'm glad that David De Jong has indicated that there's some relief already that we're able to see across. So at the moment, you're able to tell from the polling, we have relief on the reporting deadlines, on virtual board meetings, still nil on capital standards, and still nil on accounting standards. So we'll still continue getting response to that perspective. So the next phase of presentation or interaction is going to be by Fumbani and Dixon. And the reason why we've selected Malawi in this case, because Malawi has kind of a dual regulatory framework. And in this case, we want to see how both of them are jointly working together. In the Kenyan case, what you saw in Kenyan case is ACCOSCA being proactive with both the regulator and the cooperative department to see that the members are protected. But in this particular case, you have a situation whereby by design, they are meant to work together from the word go. So we'd like to have an engagement with Dixon and Fumbani from Malawi.
Okay. Okay. Thank you so much, George. I'm not very sure if Dixon is around.
Yes, I'm around.
Yeah. Oh, yes. So I can. So okay. So Dixon, do you want to start from the regulatory perspective, and then I can come in from the other side?
Thank you, Fumbani and George. I think Malawi has been a bit relaxed in response to this COVID-19 pandemic. It's up to until last week when the government came up with directives as regards to what needs to be done to reduce the spread of the COVID-19, as well as what institutions have to do to help those that will be affected by the COVID. So among the issues that the government gave us a directive, issues of gatherings, where gatherings are restricted to not more than 100 people. And that already has an impact on the SACCOs, particularly this time around when SACCOs are holding their annual general meetings. And then again, the government gave a directive on to the central bank as a regulator to give guidance on the moratorium, particularly to those that will be affected by the COVID-19. And again, the issue of the regulator to come up with a stimulus package to provide the financial institution. But in this case, I think emphasis was made on the commercial banks. It's when we discussed as a central bank that we need also to consider other sectors of the financial institutions, like presenters earlier on have indicated. I think SACCOs in most countries are not taken seriously as having serious contribution to the economy of a country. I see that also happening in Malawi, where SACCOs are not considered much as regards the impact on the economy of the country. And therefore, when it comes to issues affecting the financial sector, the SACCOs are considered last. And this is the issue that we've been talking about as a regulator just this week, that whenever we're coming up with directives or guidance on how the financial institutions should prepare themselves as regards to the impact of the COVID-19, SACCOs, as well as other financial institutions, just like microfinance institutions, commercial banks, should be considered as well. So because Malawi has been a bit slow to react to this pandemic that we have amongst us, what we are planning now is to have key stakeholders meeting. That's the regulator, the National Association, and the registrar of cooperative societies, so that we can now come up with strategies on how we move forward as regards providing some strategies on how SACCOs should address impacts of the COVID-19. I think at this point, let me stop there and then invite Fumbani to continue from the National Association perspective. Thank you, George.
Thank you so much. From the National Association, I think on our part it has been lobbying. Since last week, when the government announced a number of measures that the regulators should undertake to discuss with banks as well as SACCOs, MFIs. Already we started discussing amongst ourselves and even the registrar of cooperatives. The number one issue that we have thoroughly discussed and the circular is to be issued is on dividends, that this time around SACCOs are supposed to be handling AGMs. The registrar will be sending a circular, but SACCOs have already been informed that no AGMs currently, but dividends, they can distribute the dividend. And just like George was reporting in terms of the elections, that has been postponed. It means it can only be done when everything is over. The current boards continue to operate. This has already been communicated to SACCOs, but the registrar will also be issuing a circular to that case. The other issue that we have worked with the SACCOs in the area of lending. Before the directive from the government, we already discussed with SACCOs to come up with products that tailor-made to this pandemic, that possibly members can be able to access some loan products that are carrying maybe lower interest rates, and also the flexibility in terms of restructuring some of the loans, especially the loans targeting the SMEs. That was discussed. The issue of limiting the number of board meetings, that is the physical board meetings, physical committee meetings. This was also discussed and addressed in the SACCOs, that we encouraging the virtual meetings, and most of the SACCOs are already doing that. access to the banking halls. This we also guided the SACCOs. Before last week, the government had the directive was talking about gatherings of not more than 100 people. But on Saturday, the state president almost is saying no to gatherings. And before last week, we had informed members in terms of how they can decongest the banking halls. We are issuing a second now circular to the SACCOs to see how best they can concentrate on virtual services, as well as those that are still opening the banking halls, to see how many people can be allowed in the banking hall at a go, maybe 10 to 20 people only. So that we're also issuing another circular apart from what we issued last week. We also we've also advised SACCOs in terms of how they can be prudent in terms of financial management, almost stopping issues of capital expenditure unless possibly we discuss, so that maybe they should be sure that they are maintaining a lot more liquidity during this time. So those are some of the issues that we have so far discussed. However, the issue that is at hand right now, the issue that we are still discussing with the regulator since yesterday, is the directive on the moratorium, because what the state president directed said that the registrar of financial institutions should discuss with the apexes, the MFIs, the banks, and ourselves to see how we can implement the moratorium on loans. He specifically ordered that the moratorium should be on principal and interest for 3 months. So this one we checked with the regulator, and we're still discussing. We've not concluded in terms of how we can implement this. I'm also aware that the registrar of financial institutions will be engaging us later in the day, in the next 3 hours, talking to the CEOs of MFIs and of MUSCO to see what we have agreed on this. So this this meeting is very handy, because we're still getting the ideas that Dixon and myself can sit down to see how best maybe we can come up with some suggestions on the moratorium. And maybe this meeting can also give us some input to that effect. So we are at that level now. We should be ready to issue some circulars maybe early next week, based on what will be agreed this week. Thank you, George.
How do SACCOs access stimulus package? Because there is that stimulus package that the government has directed the Reserve Bank to make available for commercial banks, and the issue has been emphasis on commercial banks. And then internally, as regulator, we are saying no, it can't only be the central banks; it has to be across the financial sector. SACCOs are equally affected in this case, so it has to be considered as well. So that's one thing that we are going to also include in the discussion, other than the issue of the moratorium, but also the issue of how do SACCOs benefit from the stimulus package that the government has directed that the central bank should make available to the commercial banks. But here we're saying we need to have all financial institutions access that fund. So this is one area that we also have to discuss as the areas next week. Thank you, George.
George, before you come in, the registrar of cooperatives also, as you know, the way we work ourselves with the regulator and the registrar of cooperatives, we meet every quarter. I just saw the request from the registrar of cooperatives also asking us to when we can meet quickly once we have sorted out this, because they also want to give their input. So I'm sure this meeting we are talking about, we're also putting the registrar of cooperatives in the loop. Thank you.
Hi, probably we could have Tabani speak. I think George's power is off.
Tabani, are you able to hear us okay?
Tabani? Let me try and call him.
Unmuted. You unmuted. He said unmuted. No.
Tabani, we can hear you. Can you hear us okay?
Hello.
Yes. Hi. Can you hear us?
Hello. I can't hear you. I don't know if you can hear me.
Yes, we can hear you.
Hello, how are you? How are you?
We are good. We are hearing you loud and clear.
It's cutting. Thank you. I'm fine here. Just that we are in these sad times where lives are being lost due to the virus. I want to thank you for this webinar too. It has been quite informative and it has given us a number of options that we can assist our SACCOs from the regulator's perspective. We in Zimbabwe were in already discussing about the mandate of the managements of these cooperatives, including SACCOs, because their terms of office have expired during this time where they can meet. So we are already offering a relief that is in the circular to them is in the making to make the current cooperatives management relevant. A number of options discussed here, we're taking them as options. We have not yet implemented them on our side. But more so, you find our cooperatives, our SACCOs mainly, collect their money and bank in a financial institution. So what affects financial institutions and individuals in general also affects the person of a SACCO as they do their banking. So if the banking system closes and people cannot access withdrawals, it means our SACCOs also are failing to assist their members who need to borrow to mitigate against the COVID-19 virus effects on them. This is the situation we're facing out, and I'm happy through interventions, the central government today allowed banks to open so that people, including SACCOs, can also access their funds and therefore members can be assisted. A number of livelihood interventions that also affect the SACCOs are being initiated at government level. I think on our side, where liquidity is required, where SACCOs should also access some funding, where even the governments worldwide are looking for external funding to support their internal systems and mitigate on the effects of the COVID-19 virus, we find them mainly the issue of sanctions in Zimbabwe has been limiting access to external finance so that we can be we can assist in these efforts. But however, we want to also appreciate that there are international efforts to try and have certain sanctions relaxed so that Zimbabwe can access even credit of lines of credit, that they can also assist their institutions. In a fund to support small businesses, including cooperatives, is in the right now. Individual members of cooperatives who have collected for the SACCOs were in business, they are failing to access their dividends right now. Government has availed a social service fund where individuals who are losing income because of the lockdowns we have will access finance from government through EcoCash. This is going to be in excess of 200 million that has been set aside, that is Zimbabwean dollars, to assist and cushion the lives of people who cannot do business now because of the lockdown effects. So in general, that will also benefit members of SACCOs because they've also submitted their lists and they will benefit from this social service fund. So these are some of the mitigations which you can have in general to the citizenry, but it also touches on the SACCOs. The meetings, we have also the limits like Malawi, they have got all those things, a limit, a cap on how many people can meet. But internet accessibility in some of our parts of the country will hinder issues of teleconferencing. So we are busy discussing about this. When we issue our circular, we will have reached an agreement. Some of these things are statutory, where the registrar cannot just change statutory issues. Therefore, put for consideration of the Attorney General's office how some of the legislation can be waived at this time to allow committees to still retain their mandate and decision-making power. I think this is all I can say for this, but I want to thank you for this. Thank you so much.
Thank you so much, Tani. This is Susie Cheston with WOCCU, and we've been so honored to participate with ACCOSCA in this webinar. We are running a little bit more, but I would like to invite Emmanuel Coffey from Ghana to speak for just 5 minutes, and then we'll close with final reflections from Andy Price. Emmanuel, are you able to join us? Thank you.
Hello, good to meet you, panelists. David, on mute your microphone, please.
Emmanuel, we could hear you.